Finance News. It's a very good morning to Sue Lannon. Sue, g'day. So we knew the year in terms of house prices in Australia was a bit of a mixed picture around the country, quite bad for the major cities and good for some other cities. Talk us through what the results are.
Yeah, well, we've got the latest data from CORELOGIC, which is a research firm which looks at home prices, and they say that we've seen the biggest fall in national house prices since 2008. So that's when the global financial crisis was taking place. So home prices down by 4.8% over 2018.
That's across the country.
That's across the country, and putting it into perspective, we've had record home prices. There's been a construction boom, so that's coming back now. So I'll go through some of the falls. 4 out of 8 capital cities saw an annual fall in home prices. Sydney had the biggest falls. Sydney had the biggest rises. Prices down nearly 9% over the year. And Joe, that leaves a median price of just over $808,000, which is still a lot of money for a house. Prices in Sydney back to where they were in August 2016. In Melbourne over the year, prices fell 7%. That leaves a median house price of $645,000. In Perth, prices fell 4.7%, but there you've got a median house price of $446,000, so much cheaper in Perth. Darwin prices fell by 1.5%. The home price falls were led by Sydney and Melbourne, but prices actually have been falling more in Perth and Darwin because their price falls started around mid-2014. Now, some capital cities did rise, but the rises are at a slower pace, which shows that housing market's slowing, so the pace of any expansion is also slowing down.
Wasn't Hobart roaring ahead?
Yes, Hobart's roaring. One of the few places it is. Hobart prices up 8.7% to a median home price of $457,000. Brisbane prices up by about 1/5%. Adelaide prices up by 1.3%, and Canberra prices up 3.3%.
And what's the reasoning behind all of this?
One of the key issues is lack of access to credit. So especially because of the Banking Royal Commission and also actions by regulators crack down on risky loans, it's harder for people to get a loan. They've got to jump through more hoops to get a loan. So that's the key reason. Also, you've had the construction industry slowing down. There's weaker consumer confidence. So these are the main issues. And also, it's the cycle of any economic cycle goes through a period. Recent years, we have been seeing 10-year economic cycles from boom to bust. So we're seeing a similar pattern at the moment in the housing market.
And for our regional viewers, what can you tell them about what's been happening in regional Australia?
Well, generally prices are also weaker in regional Australia, but the falls aren't as much. And the CORELOGIC actually found that there was some exceptions. People are looking for more affordable housing. So that's seeing prices rise in some areas, as we saw with Hobart, because Hobart's got, that's the capital city, but Hobart's got cheaper housing. Also, prices rose in regional Tasmania. In fact, they rose by nearly 10% over 2018. So what CORELOGIC is saying is that it's a buyer's market. Homes are staying on the market for longer. The sellers are having to negotiate more. They're not getting the prices that they want. So it is a good opportunity for people who want to buy a house or a flat to get into the market.
If they can get access to the money.
If they can get a loan.
Yeah. And what else has been happening in finance?
Yes, well, local markets started weaker today for the first trading day of the year. Let's take a look at the charts now. In early trade, the ASX 200 is down about 27 points. It's most sectors on the ASX 200 are in the red, although it has come off its lows. Taking a look back at Wall Street on New Year's Eve, it ended the last trading day of 2018 with the Dow Jones index up 1%. However, US stocks marked the worst year since the global financial crisis a decade ago. The Nasdaq hit a bear market. Now, for 2018, the Dow Jones index dropped nearly 6%, the S&P 500 fell 6.2%, and the Nasdaq lost nearly 4%. By comparison, the ASX 200 actually fell more in percentage terms, so it fell for the year by nearly 7%. Now, over December, US stocks saw their worst Christmas worst ever Christmas. The S&P 500 slumped just over 9%. The Dow Jones lost 8.7% and the Nasdaq shed 9.5%. Let's take a look at commodities now. Spot gold's edged lower. Oil prices have edged higher. And now to currencies. The Australian dollar's trading around 70.5 US cents, steady against the greenback.